Okay. In our previous session, we were discussing about what do you mean by financial statements or external financial reporting purpose, right? In any organization that is running their business, it's one of the crucial thing or important thing for them to release financial reports. Without releasing financial reports or preparing financial reports for their information, at least nobody would be in a position to continue their business, because financial statements are the one which will let them know and also let investors know how company is performing. That's what we checked or we seen in previous class. Okay. Now, as part of that, we understood profit and loss account is one of the statement that we prepare, which let us know or let the company know what exactly the profit or a loss made for that particular period. When we say period, it can be for 1 month or it can be for a 1 quarter or it can be for 1 year. So generally, period in SAP or accounting terms, we say it's like a 1 month is called as a one period. Okay. So now every month companies prepare profit and loss account, balance sheet also they prepare every month to see the position. But generally they release this like a quarterly and yearly, quarterly, half yearly and yearly to the general public as well. Now we have seen at a high level, what do you mean by balance sheet, what it contains, what is profit and loss account, why as a consultant we have to see this. We should be in a position to replicate them, or whenever business is asking for certain changes, we as a consultant should be in a position to incorporate those changes what they are looking for. That's the main purpose for us to understand. That's the reason today what we will do, we'll get into a transaction level, like I was saying yesterday, and see if we can prepare one set of financial statement, including your trial balance, profit and loss account, and balance sheet, all these three. Okay. So now what I'll do, as a part of today's topic, I have already listed some transactions. Let us go through them quickly to understand what exactly they are. And then we can understand what it is exactly, how to prepare a journal entries and everything from there on. Okay. Now, when you look into these transactions, I started showing or I started writing these transactions considering any business that we start with, this is how we'll start with, right? So now if you look into this, particularly the business transactions, it is very clear somebody who is starting their business. You guys also can, excuse me, relate what exactly this means, right? So whoever starts their business, so we start with some capital, which means you need to start investing some money into your business. That's where actual business starts with. Then it involves various things like paying various office expenses, and also you will also earn income from that operations what you are doing. And by end of the month or end of the year, if you are calculating, generally consider this as a 1 month of transactions for a prior month. When I started my business in a last month, January 1st, I started my business. By January 30, I wanted to know where am I standing. That's a common thing anybody would be interested to see. You invested some money, but you don't know how much you earned it, whether it is a profit or a loss. It is difficult for us to understand. There are certain things which will become assets in the sense maybe the fixed assets which is going to be there for a long term with our business. How do you treat that? How do you consider profit or a loss for all of that, right? Let's quickly look into these transactions. By quickly looking into this, what transactions I have started, I have prepared a list of items or transactions for 1 month. Let's say a business owner started business by investing $100,000, which means if you convert that into INR, we call it as a $1 lakh. Okay. Or let's say that 100,000. Okay. And he paid 12,000 as a rent for the month of January, or let's say December month rent. If you say maybe advanced rent he paid for the same month, right? 12,000 he paid for it. And he purchased office equipment for a 20,000 on a credit basis. What do you mean by credit? He's not paying directly cash today, but he will pay after some time. Maybe he got some time from the vendor to pay it. The vendor allowed him to pay after 20 days, 30 days, or a 1 month, something like that. Let's see that during the rest of the transactions, you will understand when we are making a payment to them. So he purchased on a credit from IKEA. IKEA is one of the furniture store where he purchased all his office equipment. And in this case, IKEA will become a vendor to this organization. Then he purchases office supplies for 2000 rupees, $2,000 in cash. Okay. And he purchased and he performed certain services, which means he has rendered some services to one of his clients. The business has given some services, but they received in cash. Okay. So direct cash. Though there is a customer name involved, it doesn't matter, but as it is a cash transaction directly. And then he completes a project for a client, another client, which is a Walmart, and they bill them $25,000. That will become your accounts receivable. Let's see how I'm going to convert that. And similarly, if you read these transactions, maybe you can go through this later, all the transactions. I'll show you one by one how to write a journal entry. If you go back and understand the accounting cycle that we have seen, first thing I should know what is my business transaction that contains financial impact. And how do I convert that journal entry, that transaction into journal entry? Then we'll proceed with a general ledger preparation, then trial balance, income statement, all the way down to balance sheet. Okay, let's get started. To write a journal entry, like we discussed yesterday, we should be aware about certain basic things. So there is something called account types, right? We can categorize all these transactions, whatever we have written here, into proper account categories. If I divide all the transactions, that will contain one or the other accounts from these three, whether it is a real account, personal account, or a nominal account. That we need to identify. Based on the rules, what's exactly happening, just apply that and you will be able to write a journal entry. It's just a kind of a recap for all finance and accounting professionals, those who are coming from non-finance background. It will be like a first lesson for you to understand how to write a journal entry. For those who coming from a non-accounting background, you might feel something new, but don't worry, you will get used to this and ask me for more information or a more uh, details how to make sure you are comfortable with this. Okay. Now let's continue, start writing some journal entries from here. You guys also can help me to write a journal entries. From there on, I'll continue to prepare ledger balances. By considering the first transaction, if you look into this, owner invests $100,000 cash into the business. What should be the accounts which are impacting? By looking into this rules, what should be the journal entry we can write it? Can you guys help me quickly so that I'll put all that form here? Anybody want to give it a try?
Sorry, can you show me the question again? I missed
Here is a
it.
business transaction, Uma. The business transaction, the person or a owner started investing $100,000 to start his business. What would be the journal entry for that in case if I want to write it to the books?
Cash to capital.
Cash debit and capital credit.
Yeah.
So just quickly to apply the same rules, just to make sure we are aligning with the accounting rules. Double check others also. Are we following any of these rules? We are debiting the cash because cash is coming into the business. What comes in as per real account rules, cash is coming in. So I'm debiting the cash. Okay. I'm creating the capital. Capital is like a somebody who is giving it. Okay. Maybe it's taken by business owner. From the business owner, we are putting into the business. We call it as separate business entity. In accounting, always we treat owner as a separate, business as a separate. Both are not the same thing. Though the owner is investing, you need to treat both as a separate entities. The owner is different, but the business is different. That's one of the concept. As per that concept, you are treating, there is a different person is giving money to the business, whether it's a owner or a bank or someone else, you need to treat that as a separate entity. That's the reason we are putting that as a credit. Now, very simple. Now, let's say first journal entry, I'm writing it. Sorry. Cash account debits and your capital account credit. Okay. Now, let's say $100,000. Okay, that's the first entry that I have written. Now, the second entry that we have, second business transaction that we have, then this business has incurred an expense of 12,000 to pay for their office, to rent, to pay a rent to their office. What should be the entry?
Rent account
Rent
debit
account
and
debit.
cash or bank account credit.
Okay, rent is one of the expense. Everybody can understand it. What do you mean by expense? What do you mean by income? Expense is something that you are spending out for certain activities. So whenever you are paying something out for certain things, that is treated as an expense. If you see the expense, it's a part of nominal account. All the nominal account debit all expenses and losses. That's a basic fundamental that we know already. Now, what I would say rent to debit, and as we are paying in a cash, I would say pays 12,000 of office rent. It is not specified whether it is a bank or a whatever. So if it is not specified, we consider as a cash. Okay, cash credit, because cash is going out here. It is $12,000. Okay, so that's a debit and credit. If you consider any transaction that contains two-side impact, one is a debit side, other one is a credit side. Always it will have a debit and credit both. That is what you can see for all the transactions. And another thing, all the debits should equal to the credits. Now, anytime that you consider the debits, all the debit items should equal to the credit items to make sure all your accounting is going right. Okay. Now, let's continue with another transaction. Purchases office equipment for 20,000 on a credit from IKEA. 20,000, I'll put amount here. In the meantime, help me with the transaction, what to write.
Office
Equipment to cash.
account to cash.
Equipment debit. What should be the
Cash.
credit? Here, the transaction we are calling it as on
Credit.
credit. When I say
Credit.
credit, so which account should I credit here?
Bank account.
Bank account.
Bank account, only when you pay through bank. As it is a credit transaction, you need to consider this as a liability. This is where a vendor comes into picture. So vendor transaction, you create a liability. Okay. So whenever you say liability to be created, we need to record a vendor name as it is, so that I'm going to pay to this vendor later. Credit in the sense, today I'm not paying to you, boss, give me your material. Rest assured, I'll pay you the cash after 10 days or 20 days. There is a contract between vendor and the business both. Vendor, supplier, whatever the name you call it as. Okay. Now IKEA is agreed whenever I wanted to start, right? Now here I would say
IKEA.
IKEA direct. Is everybody able to understand why I'm putting IKEA account here?
Yeah.
I would say accounts payable. In short, in case you don't want to show IKEA name, you will put it as accounts payable also. Okay. This is the liability that I'm creating it. This is called an open item. This 20,000 is an open item. Why it is an open item? Because there is a liability that I'm raising it. This vendor will ask me anytime to pay this cash. Because I have taken on a credit, I am liable to pay this 20,000 to this vendor. That's the reason we call this item is an open. This is not an open item. I paid already. It is closed. The cash, I already got it. It is also closed to transaction. This transaction is not yet closed because I still have some responsibility, that is a liability for me to pay to the vendor. Okay. Now I'll call this as an open item. You will understand this open item. Your business will say that we want to maintain certain items as an open item. How are you going to maintain that in SAP? This is the concept that you need to understand. When I say open item, you need to maintain certain accounts. Let's say this account I want to maintain as an open item. That I'll show you practically in a system also how to do that. For that, you need to understand what do you mean by open item, how to maintain it. I maintained as an open item by mistake for a cash account. I don't want to maintain going forward. I want to deactivate. Is it possible? Not possible? All these are part of your interview questions as well. For you to crack this or to handle in a project, you need to understand the basic things. What do you mean by open item, right? That's the reason I'm letting you know now very clearly, rather than putting a cash or a bank, why I'm putting a vendor account or the accounts payable here. This is the main reason. Okay, there are certain accounts. Next time when I say this account is open item, then you will understand it very easily. Okay, let's get into the next transaction that we have. So now the fourth transaction that we have until 3rd January, we are done. January 5th, purchase office supplies for 2000 for a cash. Okay, this is a cash transaction, 2000. Okay, office supplies in the sense it's a stationery. Consider this as a stationery that you purchase for your office use.
Stationery account debit, cash account credit.
Okay, stationery debit, as it is paid through cash, you just credit. Your debit equaling your credit. We are good. The next transaction we have here is 7th January. You performed some services, which means you had given some services to one of your client. Consider you are a service-based company and you given some services, maybe some consultation or any other services, and the customer paid $15,000 as a cash. What should be the journal entry for this? Whenever the service is performed, services in the sense what exactly it is?
Revenue.
It's a revenue. Very good. So what am I getting? Revenue
So
is on
Cash
one side.
is coming in, debit.
Cash
Debit,
is coming in. Very
credit.
simple.
Service
Cash is
revenue.
coming in.
Service account
Yeah. Sales, or you call it as a revenue. Okay. You
revenue.
are receiving a cash and you need to record a revenue. This is a part of your revenue accounting. You need to recognize your revenue. You are recognizing the revenue right now because you are getting the cash, right? Now let me say 15,000. If anybody is not convinced or not understanding, let me know. Then I can help you why I'm putting debit, why I'm putting credit. Okay. The next transaction we have after, what is this transaction date we had? Let me go up quickly. So what I would do is, to make this work easy for us, I'll take a screenshot of these transactions and I keep it aside so that it will be easy for us to scroll through. Okay, I no need to go again and again up and down. It will be easy for you guys also to recognize. Okay, let me know if this is okay. Okay, now you can read the transaction. We'll continue. Yeah, now look into the next transaction that we have. I think on January 10th.
So
Okay.
again, it's revenue.
Again, it's a revenue. Okay.
So accounts receivable or Walmart account.
Okay.
debit.
So he completes a project for a client, which is a Walmart. So whenever we are saying a name, there is nothing called a cash. It is not specifying as a cash. Okay. So wherever there is a client names comes in, vendor name or a customer name comes in, treat that as credit transaction. Okay. Which means they are going to pay later or we are going to pay later. So in this case, they mentioned Walmart very particularly, but there is nothing about the cash and saying it's a bills. They are just raising a bill today. Okay. Now what I'll do, I'll just start putting this. So now this is also revenue. I'm not receiving a cash. Instead of cash, what I'm receiving, I am going to record the Walmart name. In short, yeah, I'm raising a AR now. It will get debit and it will become your sales or revenue, the same thing that we have. Okay. This is for total value of $25,000. Okay. All right. Now, if I get into the next one, okay, what is the next transaction that I have? You guys can read the transaction and help me in the meantime, so that we'll quickly move on with the transactions. Okay. We're done until January 10th, January 12th.
So Jan 12th,
Mhm.
we pay 5,000 to IKEA for the equipment bought on Jan 3rd.
Jan 3rd, right? We purchased something here, equipment for a 20,000 we purchased, and now we got, and we are paying partial payment now, okay, to this vendor. Let's say $5,000 is what we are paying it. Now, when I'm paying, what is happening here? Is there any cash impacting? First, think about it. So finance is all about cash, right? First thing, see first, is there any cash involvement directly? Which means physical cash going or coming in. In this case, paying, which means I'm paying the cash. Cash is going out as per real accounts. Credit what
We
goes
have
out.
to debit the IKEA account because there we showed as account payable. Now we have to debit the account.
Exactly.
Yeah.
Exactly. So now what I'll do, earlier, whatever the liability that I raised, I have to reduce this. To reduce that, I have to make opposite side of it. That's another blind thing that you can think about it. Now, vendor is a liability. Liability is getting reduced. When liability is reducing, I have to credit it. Sorry, I have to debit it. Let's say it is reducing by 5,000. As I am paying through the cash, let's say cash is getting credited. Let's say cash account credit and say 5,000. Okay. So this is how. If I want to see my IKEA balance, I'll see this 20,000 here and reduce 5,000 and it will become 15,000 as a still open item from IKEA. I had to pay 15,000 to IKEA. Everybody agrees, right? Out of 20,000, I already cleared 5,000. I have a 15,000 more to be paid. Okay, next transaction we have pays employee salaries. By end of the month or mid of the month, they paid salaries to the employees 8,000. Okay.
Salary account debit to cash or bank.
Salary is an expense account. So I'm putting as a debit, salary as a debit, and cash is involved here. Cash is going out. So I'm putting it as a credit. Okay. These are the fundamental rules that we have seen already. Okay. The next thing. Okay. Next one, receives 10,000 from Walmart, which we billed earlier. See, 25,000 is a liability which we supposed to receive IAR from a customer called Walmart. Now they are paying partial amount of 10,000. Out of 25, they are paying 10,000. Now let's say 10,000 here. And what should I do now? Similarly, what we did in a previous transaction. So Walmart account.
Debit to Walmart.
Yeah, we need to credit Walmart
Walmart
because
and
yeah.
cash.
And as we are receiving a cash, debit what comes in. This is what I write it. Right? Is that clear for everyone, right? I hope you are able to follow me. So now they are in a position of expanding their business, or the $1 lakh what they brought it, they are not able to manage it. They need a more loan. They need a more capital. So what they did, they have taken a bank loan of 50,000. Now it's a loan for them. They want to pay it. Loan is again, it's a kind of a liability that you need to pay it back later. Now, how do we record it? What is happening here? Cash is coming in. So cash debit, and let's say bank loan. That is your liability. You are crediting it. So whatever the loan you are raising, liability is what it is getting recorded. Now it's a 50,000. This is the transaction that we write. Okay. Now he pays utility bill. What is utility bill? Maybe like, let's say your electricity bill or a water bill or something like that. Any other utility expenses. Now this is one of the expense. As per expense rules or the nominal account rules, if you see that, so debit all expenses and losses, right? So here what happens? Utility bill. Utility bill.
Cash. Cash account.
Utility expense debit. And as we are paying in a cash, it's credited. Perfect. So it is 1,500. Okay. Next transaction in the meantime, if I see that we have 3,000. Okay. 3,000, what happened? He has withdrawn for his own use. The owner has withdrawn for own use. There is a 1 lakh or a 100K he has invested into the business. Now he needs something for his personal use as well. Apart from his salary and everything, he wanted to use for some personal expenses. He has used it. That you call it as withdrawals. Okay. Now, whenever owner withdraws some cash, what will happen? His overall capital will come down. Capital will come down. That we will calculate when we prepare general ledger. Now we'll record this under drawings. Drawings as a debit, and cash is going out here. This I'm treating as a business point of view, not as a owner point of view. Owner is separate, like a business is separate. I'm writing in the books of business only. I'm not considering the owner books here. Okay, that's the first thing that we always need to remember. Now, so he has withdrawn 3,000. Cash went out. So I'm creating it. So then pays 500 for internet and phone expenses. That is just like this
Expense
one,
account debit.
right?
Credit.
So same expense,
Mhm.
maybe any expense that you want to write it, you can do that. Let's say expenses, maybe if you wanted to specify, let's say, I would say communication expense. Communication expense debit and cash getting credited. So as you are paying out. So this one is 500. 500. Now next one I have 8,000.
Cash
What
is
is that?
coming in.
Cash is
And
coming in, performs
the
additional
service.
services. So it's a revenue I'm generating, cash debits and sales or revenue. The same thing that we have written earlier, the same. It repeats. Okay. The next transaction that we have is purchases company vehicle. He purchased a company vehicle for 30,000 and paid 10,000 cash and sign a note for the rest. 20,000 is pending and it is like a 10,000 is a down payment they made. Okay. Now let's think about this 10,000. 10,000. Okay. Let me put that here. Okay. Let's start writing a journal entry first. Then we can divide this into multiple. Let's say what is coming in here when I purchase a vehicle. The vehicle is coming in, which is an asset, which is a fixed asset, right? Vehicle, I'll record this as a vehicle account debit. The value of vehicle is 30,000. Out of 30,000, what's happening? Cash is going out,
10,000.
10,000 is going out, and remaining 20,000 is a pending amount. Together is a 30,000, it is matching to my vehicle amount. This is the first thing that I need to see. I need to credit this 20,000 as a liability. You are creating a liability for this because you are going to pay this later. Maybe we'll say notes payable. Or you can say if there is a vendor name, there is no vendor name here. So that's the reason I'm not putting it. If there is, you will add the vendor account as a credit here. Okay, so this is how you'll just record it. Now let's say next transaction that we have pays 1,000 for a marketing campaign. This is purely again an expense thing. So let's say marketing expense debit and your cash credit. Okay. Now this is just 1,000. And the next transaction that we have collects the remaining 15,000 from Walmart. Walmart has paid 10,000 earlier here out of 25,000 transaction. For a 25,000, they paid 10,000 here. The remaining 15,000 they're supposed to pay. The full and final settlement, they are paying it here.
Payment.
If at all they paid only 14,000, there is a bad debt as well. But there is no bad debt concept here as they are paying in full. So whenever there is a bad debt comes into picture, that we need to understand how to write it. For now, don't worry because it's just a full cash. We are receiving it. So let's say cash is coming in. So the same entry like this, right? It's just an amount changes. Walmart account gets debit and your revenue.
No, that
Sorry. My bad.
Yeah.
This one, right? The cash you are getting debited and the Walmart gets credit. Let's go with this 15K. This is what we have it. And the last transaction that we have, he paid $200 as an interest on the bank loan that he has borrowed. Now there is a bank loan that we have taken. So we have created the liability for the bank loan also. On $50,000, they paid 200 as a interest. Now interest is another expense. Now let me put that expense here, which is the interest expense debit and cash is going out, cash account credit. It is 200. This is how you just need to understand the journal entries. Why you need to understand, though you are a consultant, is because whenever you are working as a consultant, you will receive these questions from business user. I'm trying to create this journal entry, but other line item, it is getting debited always, or it is not reflecting correctly. It is like a rocket science for you if you don't know what do you mean by debit, what do you mean by credit, why it's supposed to be debit, why it's supposed to be credited, why they are talking, why it's supposed to be. First, you need to understand their pain point, what they are exactly going through. And then it will be easy for you to convert them or identify what exactly the issue, right? That's the reason we are putting some effort to understand all the journal entries, all the business transactions, how to convert them into our journal entries. Now quickly what we will do from here, we'll try to prepare ledger balances. I'll show you one account how to prepare it. Maybe later as an assignment, you guys can look into this and try preparing it. That will become easy for you. Now what I'll do, there is a lot of transactions involved in a cash. Let me pick up a cash account so that majority of the transactions I'll cover it up. Now let's say all this column B that you see, it's a debit, right? That you guys can easily understand. This is a credit line item. If you see, let me put debit as a different color. Maybe let me put all the debits in one particular color, this entire column. You can see all this I'm putting in. Whether it is a cash or any account, that doesn't matter. All the debits I'm putting in one color so that it is easy for you to recognize. Okay, let me do that for everything at once. Okay. Now all the credits, I'll put it in a different color so that it will become easy for you to recognize how exactly it is. Okay, let me go with this. Once I prepare a ledger balance, then we'll quickly jump into trial balance, profit and loss account and balance sheet as well quickly, so that we can see a final picture how it is. Now let's see this. The moment you see all the cash transactions here, see you have a cash here, which is a debit. Here it is a credit. What you need to do here is, so let me start putting in, let me prepare cash account side by here so that it will be easy for me to scroll it. Okay. So let me prepare we call it as a T account. Manually, you don't need to prepare all this whenever you are using SAP because it has been already taken care automatically. This is only for our understanding purpose. Okay. Don't worry. Cash account. Whenever you are preparing a cash account, generally how we start is, let's say, in case you want to put a date, you can put the dates. As I'm not tracked all the dates here, so let's ignore the date for now. Otherwise, you can add the dates as per the transaction. Let's say whether it is a debit or a credit, and you can say that this is amount. Similarly, it will continue here as well. Here it will be a credit. So always you will call this as a T account. Why do you call this as a T account is you write something like this. Okay. So let's say let me quickly put this. This is how we prepare our T accounts. In the form of a T shape, the left side will have all the debit line items. The right side will have a credit line items to understand what exactly the impact of this account. Okay. Now let's see this. Dates, I'm just ignoring like I mentioned, debit and the respective amount and the credit and respective amount. How do I consider? Let's say this first transaction. In this case, the cash has a debit or a credit impact. Debit impact. So it has to be written in a debit side with the name of offsetting line. What is offsetting? It's a capital. Because of the capital, my cash account is impacting with 100,000. Let me consider this here. 100,000 cash got debiting. Now, which means my cash account has a debit balance so far. This is how we see. Now, the second transaction, rent. Again, the cash has a 12,000 credit impact. So it has to go to the credit side, stating, let's say, as a rent. Simple. Okay, this is how you just need to put it. As you put this way, you will get to know which side is more, which side is less. Then you will balance that account. Okay, that's simple. Okay, let me go here. Is there any cash impact in this transaction? That's the reason I'm not putting cash here, right? So it is a credit transaction particularly. Okay, this is where I have a cash, stationery where I purchased. It's again credit impact with a stationery. Okay, let's say stationery here, credit, and it has a 2,000. Okay, the next one I have cash, which I'm getting in. This side 15,000 I'm receiving as a revenue. It's a debit side, which is sales or revenue. okay, which is a 15,000. Then you have the next transaction, whatever you are, okay, where is this? Stationery is done, so revenue is done, right? I think next one we have IKEA, where we are paying cash to IKEA, which is a credit impact of 5,000. So I will say IKEA, say 5,000. Sorry. Okay. Then we have salary that you are paying again, 8,000. Credit your salary. And then the next transaction we have the cash that you are receiving from Walmart, right? You are debiting the accounts receivable, the cash. So you debit Walmart with the 10,000. The next thing after Walmart, okay, we have a cash again. Cash you received because of the bank loan. Okay, it's a liability. Bank loan, 50,000. Then what else we have? The next one. If I continue to see that, bank loan is done. Utility expenses, the cash is creating with the utility expenses of 1,500. Utility expense is done, and what else it remains? Sorry. Drawings, cash is getting credited. So go with the drawings of 3,000. So then we have, let's say, expenses, communication expenses. It's getting again credited 500. Okay. Then we have, again, revenue, we have it, 8,000. Then for the vehicle, I paid 10,000. Okay. So which is unfixed asset. Vehicle, it's a credit. Vehicle account 10,000. And then you have marketing expense again credit.
1,000.
1,000. Thank you. And then we have a cash again from Walmart. So another 15K. Walmart, you debit your cash 15,000. And the last transaction that we have, interest that we paid, which is a credit. Okay. Credit 200. This is the simple account how you will prepare it. Once you prepare all this, you make a total of it. It will be somewhere like 43,200. This side also I'll make it. Here I see 198,000, but here I see only 43,200. Now we need to understand something called which side it has a more balance. It has a debit side more balance. If you make a totals here, it is showing a debit balance, correct? Can I say my cash account is carrying a debit balance, which means finally my cash account carries a debit balance. This is the summary that you see. In SAP, all this will be taken care in a backend. Whenever you see a report for a cash account balance, it will directly tells you whether it is a positive or a minus, positive or a negative. Positive in the sense it's the balance of a debit. Negative in the sense it's a credit balance. That's how you will see. Practically, we'll see when I run that in a system. What I would recommend you is, similarly, you can take the similar transactions and try to prepare all the ledger balances so that you will get some comfortability. Okay. It's not mandatory, but you will get some comfortability, which will be easy for you. Okay. So whenever you wanted to understand your customer requirement, it will be very easy. Now, let's say the total, the debit balance, I will not say this is the total. The difference is my total balance. What is the difference if I want to consider 1,98,000 minus my credit? My debit balance finally, which is a carry forwarded balance, right, is my 154,800. Okay, this is what you need to consider. Now let me consider all the balances here. I'll prepare once I done with all the accounts balance similar way, ledger balances preparation. What I'll do, I'll list down all account balances in one place so that it will be easy for me to identify. For that, I need to understand. I'll also share a list of accounts later. So which account should have a debit balance, which account should have a credit balance. That list I'll provide you in the next class so that will become a reference for you so that you can also prepare a complete list of any balance whenever you want to prepare anything that you want to perform, whether it is a debit or a credit for a journal entry purpose, whether it is an asset or a liability, or whether it is an expense or a income, all that I'll provide you a major category for each and everything. Then that will serve you whenever you are preparing a journal entry, whenever you want to understand a business requirement, which will be helpful to you. Or whenever you want to perform any testing, you just refer to that list, which will be very much helpful. Okay. Now, let's say if I want to prepare a trial balance, I want to know, first of all, there are two things. Which account carries debit balance, which account carries credit balance. In this case, cash is an asset. All assets will carry always a debit balance. It's supposed to be. It can have a negative balance, which means a credit also, but by nature, generally that should have a debit balance. That's what you would expect. Okay, how to treat them when it has a different impact. That's what we need to see. Okay, so now let's say that we have debit balance accounts, or we need to say account type, whether it carries debit balance or a credit balance. You need to understand all assets will carry debit balance. This is a simple thing you need to understand. And opposite side, all liabilities will carry a credit balance. Whenever you see cash account, whether it is an asset or a liability, that we need to understand. That mapping also I'll give you later in case somebody who is not clear, somebody who is from a non-accounting background, you might have all that questions, but I'll share, don't worry on that. Okay. Now we need to understand something called expenses. Expenses always will carry debit balance, and your liabilities, sorry, your revenues will carry credit balance again. So these are the four fundamental rules that we need to remember. Whenever you are preparing any sort of account, then it will become easy for you to understand these things. Whenever you are preparing cash account balance, now you can expect cash is a debit, cash is an asset. So asset, as per that rule, it should have a debit balance. This is what we need to understand. Why you need to understand this is whenever you want to prepare a trial balance contains summary of all the accounts, whatever the accounts that we have prepared here, account balances that you need to bring it. Trial balance, what you will bring, all debits equals to credit. This is what you need to make sure. All your debits equals to credits. How to bring that? All debits in this case, all your asset accounts, liability accounts, expense account, revenue accounts, if we put it together, it has to match. If you see these accounts, whatever we have written here, the same thing that you are going to prepare in this format. Now, if I consider all these debit balances, let me go through all this. It says overall 306,200. Now refer 306,200. The same thing you will find it in a credit balances also. Let me come from beginning. This is the first transaction all the way down 306,200 because all the debits are matching with credit. Now this is the fundamental thing that we need to remember. When I'm writing my journal entries correctly, why it will not match in my trial balance? It has to match, right? That's what we need to make sure. When it is not matching, something is wrong in terms of account balance preparation that we have done. That we need to check quickly and confirm where it went wrong. That we can do very easily when you look into this, when you start preparing final. Okay. Now, let's try to quickly show you the trial balance for all these transactions that we have prepared. Let me go right and show you this trial balance. So consider that all accounts that I have summarized the same way that I have already prepared. For that reason, so what I'll do is, so just a second, let me get all the accounts from here, what and all we have it. From those accounts, we'll just prepare it. Okay. Okay, let's say that consider we have these many accounts. Okay, I just copied all the account names. Cash account we have office equipment, office supplies, vehicle, accounts payable account, bank loan, notes payable, capital account, drawings, service revenue, service or revenue, rent expense, salary expense, utility expense, communication, marketing, interest. These are the various accounts that we have seen here. If you consider all the business transactions, this will be a summarized format of all my accounts. Now, whenever I prepare my trial balance, I need to understand the debit and credits, which account carries which balance. Like I mentioned, we need to understand each and every category. The mapping I'll provide you in the next class. But for now, see this. It has to match all the debits equals to credits. Now, cash, I know already it is an asset. It should carry which balance? It should carry a debit balance, right? Office equipment is an expense. It should carry what? Again, debit balance. Office supplies is an expense. It should carry a debit balance. Vehicle is an asset. It should carry a debit balance. Accounts payable is a liability. Liability should carry what? Which balance? Credit balance. So you'll mark it here for now. Okay. And bank loan is a liability. It should have a credit balance. Notes payable is also liability, credit. And capital is a liability, again credit. Drawings is one of your expenses, so it's a debit. Revenue will become your credit always. Debit all expenses, credit all revenues. Okay, so revenue, rent is a debit, salary is a debit, utility is a debit, and communication is also debit, marketing expense debit, interest debit. So all you need to do is once you prepare this final balance like this, you just need to put it under this respective category. Now just treat this as your basic fundamental thing. Now let me put my cash here quickly. This is my cash debit balance. Finally, I have arrived. Similarly, if you prepare the account, what I'm saying, office equipment, it will contain 20,000 as expense. And your office equipment, which is, it is an asset for you. So we will have a 20,000. And supplies, which is an expense, which contains 2,000. Vehicle, you spend 30,000. So accounts payable, IKEA, it's a 15,000. And bank loan, you have a 50,000. And notes payable, you have a balance of a 20,000. And capital, you brought 100,000. And drawings, we have a 3,000. And revenue total, we earned 48,000. And rent
You already
expense.
have a ledger balance for all this. That is from where you are taking, right?
Yes, exactly. I consider that you have already prepared a ledger balances
Yes,
similar to the cash. So that's the reason I showed one account how to prepare it. If you know how to prepare it, so I want you to experiment everyone and compare with these numbers. Your ledger balances should match with this and see whether it is going right or if I made any mistake in these numbers. We'll discuss that in an upcoming session. Okay. So rent, we have a 12,000. Salary, we have another 8,000. Utility expenses, 1,500. Communication expense, 500. And marketing expense, 1,000. And interest expense, 200. If I consider all these debits and credits, it has to match. It will not match exactly this number. It can be a different number, but debits and credit has to be equal. But don't get confused with the journal entry totals that I showed here. Okay, let me do the sum here. Okay, this is what it is. Is it exactly matching debits equals to credits for me? Right? All debits are equaling credits. My trial balance is correct now. Trial balance is just a point where you confirm is all the transactions are recorded correctly or not. Now what you need to do from here, you need to calculate something called profit or a loss. How do you calculate profit and loss? You need to prepare a P&L account. If you prepare a P&L account in a proper format, there are two different formats that we prepare. Nothing to worry much because we are not learning accounting classes here, but in simple for you to know profit and loss account, how do we prepare? Or you will also call this as an income statement. Right? From here, you will arrive final net profit or a net income from this one, right? Net profit or a loss, whatever it is. For that, in simple, I'll tell you total revenues that you have it minus total expenses. Okay. So let me put that here. Minus your total expenses. If you do this, then you will get net income or net loss. Okay, this is what you need to know. Now let's say my total revenue, if you see this revenue account that I already have it here, where do I have this? Service revenue. This is my total revenue, which is 48,000 is what I earned. And total expenses for the period that I spent, if you consider all the expenses that you have it here, like rent expense, salary expense, utility expenses, and communication, marketing, and interest. All these are my expenses only for this period that has happened, for example, okay, minus 23,200. If I consider these two, 24,800 is what I get it. 24,800 will become your net income. If it is a positive number, we consider this as a profit. If it is a negative number, it's a loss. So net profit that I got it. There is something called retained earnings that we need to calculate, which is very much important. Retained earnings equals to, let's say, net income minus if there are any drawings. So this will be my final number. So let's say I already know, let's say 24,800 is my net income minus my drawings is 3,000. My retained earnings is 21,800. What will happen to this retained earnings? This will be carry forwarded to your balance sheet. We'll transfer this to the balance sheet. That's what we need to understand. How do I prepare it? My balance sheet. Whenever I'm preparing a balance sheet, you need to bring this retained earnings account number into your balance sheet. Now let me put a balance sheet here quickly. Balance sheet, whenever I prepare, this contains assets and amount, liabilities and amount. Okay, let me expand this a bit. Okay. Let me do this quick. Don't worry about all these cosmetic changes, but focus on what exactly we need to understand. Now we know already what are assets, what are liabilities. I'll also provide you the list of all the accounts which carries account debit balance, credit balance, which is a part of asset, which is a part of liability in upcoming session, so that will become very easy for you. Now let's look into this asset. All the assets that you need to list it down here, all the liabilities you list it down here. Now, if you see this trial balance, you are going to pick everything from here. You don't need anything else. Starting from here, cash is your asset. And what else we have? Office supplies. You consider that as your asset for now. You have a cash total balance of 154,800. Office supplies, you have 20,000. Sorry, I think this is supposed to be 2,000. Office supplies is a 2,000, not 20,000. Okay, so let me pick that from here. Yeah, vehicle also is your fixed asset, right? These are current assets, I would say. Let me put this as a current assets. These are current assets. There is something called fixed assets now. Fixed assets, your office equipment. Office equipment is going to be a fixed asset for you, okay? Which is a 20,000, and vehicle carries again 30,000. These are my fixed assets category. There is a different meaning for a fixed assets, and how you treat them is also matters later. We'll understand them later point of view, why I need to categorize them as a current asset, why I need to categorize as a fixed assets. Those who are coming from finance and account background, you can easily relate how we calculate depreciation on what. That's the main purpose I'm categorizing them. Okay, you will see the similar categories in your any company's financial statements also. Now what else I have? I think that's all we have it. Now if I consider all the total, I have a 206,800. This is my total balance of assets. I would expect similar liabilities also. Starting from current liabilities. What are my current liabilities? Let's say your accounts payable related. What is your accounts payable? Only IKEA in this case, 15,000. Okay. So consider this liability is 15,000. You don't need to put minus number, but you can directly add it here, current liabilities. And let's say, what is this? I don't know why there's AP. Okay, so now current liability. Okay, sorry, I added AP here.
Yeah, amount
Okay,
should.
fine. Yeah, okay, fine. What I'll do is I'll put it for AP here rather than putting at heading. Okay, accounts payable is a 15,000 that we have it. That's the only thing. Then this is a current liability. Similarly, we have a one more category in our liabilities, which is a non-current liabilities, or you can also call it as a long-term liabilities. Okay, long-term liabilities. What are long-term liabilities or a non-current liabilities? Is a bank loan. Bank loan you have taken with the intention to repay later, and also similarly notes payable, which will have a long-term impact, which is a 50,000, and you have a 20,000 as a notes payable. If you see this notes payable, we have these two. Okay. So then what else we have? We need to understand something called equity. Equity is also part of your liability side. And first thing in this is a capital. How much is the capital? If you see my capital account, it has 100,000. Okay. And if I make a total, it will not match. Let's say this is my 206 here. Okay. So let me put the totals here. Let me drag this to include until here. Let me make them here. Okay. Now, if you see this, okay, it is not matching. There is a difference between both. Can anybody guess what should be the difference? Why there is a difference? If I want to calculate this minus this, there is a 21,800. There is a gap of it. Is there anywhere this 21,800 that we can figure it out what exactly it is?
Retained earnings.
It's a retained earnings account, right? This is the major portion that you will see it here, which is a part of your liabilities always. This is a fundamental thing that we need to understand. If you are able to understand so far here, though we might went a little quick, you can revise this one more time and try to understand it, which will be easy. Those who are not able to follow and understand any of this concept, might be it's been a long time that you are looking into this, or somebody might be from a non-accounting background. That is okay, but make sure you understand it, or ask me questions in upcoming session or now, so that I can clarify your doubts about any of these concepts that we are doing it now. Okay, so I think this is how you need to understand how to prepare final balance sheet. Until balance sheet, if you are able to prepare from the transaction this way, you are good. Whenever you look into any company's financial statement, how they are preparing, this is how they are doing it. As a consultant, we should have some understanding, though I'm not going to prepare it on my own. System will prepare in a backend automatically everything. But whenever you say something is not matching, you should be in a position to go back, drill down, and identify issue, then fix it. For you to fix, you should know the problem from where it is coming, why it is coming. Only then you will understand it. That's what we need to see. All right. Now, okay, so let me stop here and let me know if you guys have any questions. In the meantime, I'll also prepare a small assignment for you all so that you will get a comfortability of this particular concept that we discussed. Okay. Yeah, you guys can shoot out questions in the meantime so that I'll put the assignment here so that it will be easy for you. Yeah, like I mentioned, maybe you can also list down your own transactions, or if you want to copy the same thing, you can do it. That's okay. Write JEs, journal entries. Then you prepare all financial statements. Your TB, P&L, and balance sheet. So that you will understand where you are lacking, what exactly help you need. Okay. Then I can help you wherever you stuck. Feel free to ask me for a help so that I can help you wherever you struck. Okay. So Yeah, if no questions, I think that's it for today's session. And the next class, what we will discuss? Next class we will have on 2nd March. Tomorrow and day after tomorrow we will not have the class, and we'll continue from 2nd March. The next week onwards, we will have a regular classes Monday to Friday, the same timing. Okay. And those who yet to confirm your registrations, you can confirm by this Saturday or a Sunday, and so that you will receive a link for Monday. Okay, that's the only request for everyone that I have. Okay, if no questions, I'll stop